when MFIs or MFB tells you their goal or their target is to drive financial inclusion to the last mile, or one of their biggest vision is to ensure that those at the bottom of the economic pyramid have access to finance, to empower them, to ensure that they are able to live above the poverty line. The question is, your agents of empowerment, are they empowered? Right? So, and if you are not able to answer this question as a
major challenges that relationship managers or loan officers face, especially in their first, early stages of their career, is usually client acquisition. Sometimes some institutions do not give their foot soldiers all the information that they need. Is when they've gone out to go and do marketing, that's when they will not get some questions which they will not have to even take back to the office. I think that's one challenge that some new entrants into the business will face. Another area is giving customers expectations. You would have told the customer that if you start your process today, within 48 hours, and you submit everything, you'll be able to disburse, right? That's your selling point, right? So if you sold this hope to the customer based on the fact that you have all the information, your team lead or your supervisor has given you all the information, you've passed this information to the customer has given you all that is required, you now go back and you're getting new information. It's usually a big problem for market. I think that's where people even start getting demoralized. How do I not even go back to go and tell this person that, oh sorry, I forgot to mention, you need to also bring so and so. But that's another area of challenge that I feel that most people face as well.
I think there's even a bigger part of their challenges that does not get talked about enough. And part of such challenge is where if an RM, a relationship manager or a credit officer is doing very well, building portfolio, getting the right numbers of active borrowers, having portfolios that are performing, the glory is for the entire institutions, for the superiors, for the line supervisors, right?
Yes.
But immediately some of these loans start going delinquent or they are not performing as they should, it becomes the sole responsibility of the relationship manager, where the language will now move from let's celebrate the win of this particular team or branch. So SYZRM should go and recover her money.
Exactly.
Right? So you also look at this struggle or that sense of betrayal to say, why I was doing very well with my disbursement and my loan portfolio was growing, my earnings on my risk assets were growing. It was the joy of the entire institution. But immediately that shift happens where loans start not going bad or not performing as they should. You now see a drastic change towards that same RM that everyone clapped for at the last monthly performance review. So again, it's something I think these RMs, they also do not get celebrated enough in terms of what they bring to the institution, because if you look at every major award that MDs, CEOs goes to receive, right? The lights, the cameras are always on them, on their smart business suit. But the persons that are truly driving the growth of that business, chances are sometimes they never make it to such platform, right? And I'm also happy with what technology has been able to do, because I've also had experiences with some of my colleagues in some places I've worked before where RMs will get robbed on their way from the field, because when you look at RMs that covers interiors, that go to interiors to deal with relations.
Okay, like you mean people who do like repayment collection?
Yes, repayment collections, and on their way back from unions or their center meetings, they get robbed. There has been a lot of misfeelings about those things, because while the RM is battling with, the fear and that horror and dealing with that trauma of getting robbed, the RM is also thinking about how some of these institutions will convert that money that got robbed into personal loan, because they will tell you, if we don't do it, every 3 days you have RMs coming back to say they got robbed, right? So for me, I think in that aspect, we also need to appreciate how far technology has bridged that gap, because now such clients they will have wallet systems, right, where even if they take a facility from a lender without the RM coming to them, they can just either make their seamless repayment either with their USSD or their wallet accounts.
How do you prove that this thing really happened? That it's not like I'm not trying to. I don't know if you get.
Perfectly, I do. I think the burden of proof, either from the relationship manager or the institution, is the ability to say we've been exhaustive enough of the process, right? Because if you recall your mind back to how loans were written off for customers that while their loans were still running, maybe they had accidents and they died,
Yes.
or maybe they developed stroke due to ailment, right? And they were not able to perform certain activities like they used to do before. And when issues like this come up, the necessary thing to do is say, okay,
Insurance.
since the loans were insured,
Insurance
let's
company.
inform the insurance company to come and take over and possibly write off the loan. In the case of client demise or a customer demise, the insurance company can say, get us doctor's reports,
Or even police report.
Police
Or
report.
when the stuff happened, where did you report it? to?
Yes.
Okay.
So I think that can also help in establishing for a fact that one, that incident actually do happen. And if you talk to persons along the corridors of that community, chances are they also
You can collaborate
the story to say yes, something like this did happen. And in fact, it was not just her that was robbed. We also robbed other persons or robbed in other areas like that. But I think if the institution wants to get into finding out if it truly happened, there are ways they can do that.
But do insurance companies normally cover this kind of circumstance where
They do.
robbery?
They do, because on the aspect of customers, right, they cover death of a customer, right, permanent disability, and fire outbreak in the place of business. While on the part of the staff, they also cover basic, on part of the employer, right, they cover basic things like fraud and of course thefts.
Okay.
Yes, but again, how effective those policies are is a subject of debate for another time. Or
Another area that I also think that relationship managers or field officers also face challenges, and most people that will watch this will probably even in the comment section say, what about targets, outrageous targets that some institutions set for their field officers, right? You know, there's always this animosity between marketing staff and who we typically call back office, right? Because for people who really know how these numbers are generated, if I were an RM, for instance, I know that my target is to do 100 million or have a running loan of 100 million, and I know that we earn 3% per month on that 100 million. I know that me alone, what I'm contributing to the organization is 3 million per month. Now, if my salary, for instance, is 100,000, and I know that I'm contributing 3 million a month, and then there's somebody back office that I know the person just sits in the office, the person does their job, right? Of course, but I want to measure the value that person is contributing.
True.
Like, is that person contributing enough to say this person is bringing up to what I'm bringing 3 million every month? Because it's from that 3 million I'm bringing that they're going to be paying your salary, for instance, and pay other people's salary. And so how do we really navigate this sort of
create a
issues?
balance, right? Okay, I think it's also very important that first we must also look at the bridge between risk and reach, right? And if you're able to get a balance between reach and risk, what it means is that targets that you are going to set will be realistic, right?
Yeah.
So that will lead you to talk about having smart goals, right? Smart targets that you know that they are not too ambiguous or too ambitious. Because again, if you look at the level of non-performing loan that institutions are carrying, some of this non-performing loan is triggered by some, or what I would like to call, very unrealistic targets.
True.
Because if you are not able to balance your reach and your risk, most of the time credit officers or relationship managers just want to worry about meeting the target and throwing up cautions to the wind. But if we are to come back again to look at how do you create a sense of satisfaction between a market-facing staff and those you now want to refer to as maybe back office. Again, if the targets are realistic, right, and you already know that with the portfolio I carry, month on month, I my earnings on that risk asset that I carry as portfolio is 3 million, like you mentioned, and what I take home is maybe 100,000 naira, right? So again, that dissatisfaction will be there. And beyond that dissatisfaction, I've always noticed a very weak link in the circle of inclusion or empowerment, as it is called. Because what that weak link I notice or identify speaks to is that when MFIs or MFB tells you their goal or their target is to drive financial inclusion to the last mile, or one of their biggest vision is to ensure that those at the bottom of the economic pyramid have access to finance, to empower them, to ensure that they are able to live above the poverty line. The question is, your agents of empowerment, are they empowered? Right? So, and if you are not able to answer this question as a player in this sector, that is where the issue of fraud and high rate of staff attrition starts coming into the conversation, right? Because you are saying I should give Mama Nkechi 3 million, right? To enable her grow her business, right? Or expand her inventory. Meanwhile, I'm not even sure of where I will get the transport as a relationship manager that will get me home.
Market to Mama Nkechi in the first place,
right? To even get me home, chances are to get to Mama Nkechi, the institution might even provide some measure of allowance for me to move from point A to point B, right? Under customer acquisition cost, right? But myself that is going to profile Mama Nkechi for 3 million naira facility, I'm not sure where I will get my next transport to even go home, let alone if I'm sure if I open my pantry, I will find something to even eat. And when you have that sort of, crisis right before you, then there are tendencies of fraud, right? And when it lingers and persists, there's tendency of high staff attrition, where you see that they are no longer comfortable, they no longer see purpose in staying and doing the job. So their best option at that time will be to tender their resignation letter and leave, because that's where you hear things like, my take home no longer take me home, right? So yes, it can lead to a lot of dissatisfaction when you know that the portfolio you carry as a relationship manager, the any asset from that portfolio is 10 times more than what you are taking, and the institution has not also deemed it fit to see how they can place persons that are driving this kind of portfolio, to see how they can place them on incentive and performance bonuses and allowances. Because when you also try to introduce this kind of ways of appreciating the staff that carries this kind of portfolio, they see it through the lens of, oh, I think they actually do care about the work I'm doing here, right? That's when you can see people will tell you that, yes, I barely even touch my salary, because from the incentive I get from my performance bonuses and all of that, I hardly touch my salary. But if you are not able to create that balance, there was a situation one time where I had a colleague who was a market-facing staff in my previous place where I work, said, you will not speak to me in that manner or tone because I'm the one that pays your salary. In this case, the person was literally referring to a back office staff, because the person that said this thing was a marketer, right? Because under the rain, under the sun, they are out there looking for customers for the bank, either for deposit or loans. So if back office is not trying to mirror back this energy, and how do they do that? To ensure that if they bring a ticket, they are treated on time, the customers that they are processing this facility for gets value on time, right? So, and you know that in the ecosystem of lending, until the customer gets value, the process is not complete, because they will keep on calling the relationship manager to say, I've not seen my money, what is going on? Like you mentioned starting off that you told me 48 hours. It's been in excess of 72 hours, I've still not gotten my money. So with that frustration alone, so statements like that can come out. So I think every institution, every player in the institution should try to create first a balance between risk and reach, and also set targets that are realistic. Because what is the essence, what is the end goal of setting targets that are not realistic? The ROM goes out, throughout this money, your portfolio performed for just 1 month, that facility was disbursed, and from the second month, you start having delinquent loans.
Because this thing we are talking about is, even from experience, is a real issue. Now, there used to be this lady, Mary Joseph, when I used to work with Fortis MFB, and she was a high flyer, even before I came. When you join an institution, people are talking about the performance. When they start mentioning top of, or if you attend MPR for the very first time, people that you see that they will come out and they will clap and give them envelope. Mary Joseph was one of those people, and then the target was relatively small to achieve because institutions tend to set targets based on your academic qualifications or your grade level, and your grade level will be determined by your academic qualification and your experience on the job, right? And her target then was, I think, about 1.5 million per month. Consistently, sometimes she does 3 million, sometimes she always does above her target. So what comes with performance. They say the reward for
hard work
is more work.
Yeah.
So as we keep attending those MPRs where they will clap for you, they'll give you promotion, sometimes double promotion, your salary will increase, you'll be happy. But guess what else will increase?
Of course, your target.
Your target will increase, right? So that same person that was easily making 3 million, when the target has increased to 3.5 million, all of a sudden to even achieve 1 million started becoming a problem. Why? Because all that time that you were building your portfolio, meeting your targets, you would have gotten to probably, let's say, like 20 million running loan. But the target is still there. You still have to meet your monthly targets, and as you're adding more clients in your client base, you will not have enough time to attend to all those customers, to go and do collections.
Sure.
It got to some point where she started forgetting people that she gave loans to. And that's where you start having bad loans. When the relationship manager cannot keep up with the record, of course. If you don't have a serious loan monitoring team that is always sending reminders that, okay, this person, you have 10 customers to collect loans from, total amount, these people will eventually start to forget. And so why am I bringing this up is for institutions to, let's not just base our performance metrics on just meeting your monthly target. Let there be like a benchmark. There should be like a limit to where you get to. Like, for instance, your running loan, if your running loan gets to 200 million, for instance, or if the total number of customers you have is 100 customers, right? Just maintain it at 100 customers. If you get above 100, you have to give the extra excess to somebody else to handle those relationships, so that people don't get overwhelmed either with their number of customers or even with the target
the size of the portfolio.
And there's also no point giving somebody a target of 100 million in a year when you know that you don't even, because some institutions they do that. You can give a relationship manager target of 10 million per month because you just think that 10 million is okay. But what about, have you calculated what that translates to in a year? In a year, that's like 120 million a year. Do you have 120 million, first of all, to even give out as loan? Because if that person has, for instance, a customer to be giving out 10 million every month, that's just one RM.
Yeah.
If you have 5 RMs, that's 50 million every month. Some institutions don't have that money, yet they set it as target. So what is now the essence of setting a target that will not serve the relationship manager, and it does not even speak to the capital of the institution?
Yeah. So
these are some of the areas that I think some marketers they get frustrated when they do all the math, they do the calculation to say that you are giving us unrealistic targets. The target you're giving to us, if we even bring, I'm sure you'd have had that experience where people have been giving targets, right, and they are bringing in the loans, and some institutions at some point, because of inadequate funding, they'll tell you that you should pause on disbursements do not tell them the main reason why they're asking them to hold on disbursement. So you ask them to hold on, and then when they hold on like that, they end up not meeting their target for the month, right? Or maybe they don't even meet up because of that pause in disbursement for, let's say, the month of February. Then at the end of March, for instance, you are doing quarterly appraisal, and then you now come to say, you didn't meet your target for this quarter, so for that reason you are going to face so disciplinary measure, forgetting that it was part of the company's policy that prevented that person from meeting his targets. These are also some of the challenges that people face.
I think I completely agree with you too, because again, I think the bottom line should be realistic targets where you know that it is reachable, it is doable, and it can be done within a specific period of time. Also factoring in your resources at your disposal as an institution as well.
So I think that will be all for today.